Greetings, colleagues. Do you want to improve your business vocabulary, especially about logistics and supply chain? Learn about business news and global trade? Looking to enhance your business English skills? In this video, we look at a news article about logistics and inventory oversupply. It includes some great vocabulary about supply chain and logistics. Let's level up your business English skills. All right, this article is from the Wall Street Journal, which is probably the premier financial newspaper in the United States. Wall Street is, of course, the center of the financial world, certainly in the United States, but you could argue worldwide as well. When I was a street cop, I actually had a foot post on Wall Street several times. It wasn't my normal beat, but I was there several times, keeping it safe at night. Let's get into this article. The title: Freight Rebound Hopes Are Fading Under an Inventory Glut. Subtitle: Logistics companies are paring back their expectations for demand surge as retailers keep new orders in check. So there's a lot of advanced vocabulary in just in the title alone. So I think this is going to be a great article to discuss. So freight is shipping of goods. Sometimes we talk about a freighter is a ship that ships goods. It's a freighter. It's not a warship. It's not a cruise ship. It's a freighter. It delivers freight or ships freight from one port to another. A rebound is when something recovers. We can think about it in basketball. Someone makes a shot. It bounces off the backboard. It doesn't go in. It comes off the backboard. Who comes down with the ball? Or we can think about it in romantic terms. She was dating him for a long time, then they broke up. Now she's on the rebound. She's trying to recover from that breakup. So here I mean rebound as in the industry kind of went down, but rebound, it's going back up again. It's getting better. However, it's saying that the freight rebound hopes are fading, getting weaker, getting lighter. So those hopes are going away. So the hopes for recovery are fading away, are disappearing. So maybe there's not a rebound, there's not a recovery under an inventory glut. So inventory is the stock of goods that you have that you're looking to sell. So a store has inventory, that's what they're trying to sell. A warehouse is full of inventory. When the stores are ready, it ships it to the stores so that they can be sold. A glut is when there's too much of something. So if there's an inventory glut, the warehouses are full. They're trying to get rid of this inventory, they're trying to sell it, but they've got too much of the inventory. The opposite, of course, would be a shortage. Maybe they sold all their inventory, they're trying to recover, they're trying to get more inventory so that they can keep selling. Most companies, of course, want to be in that position where they're able to sell everything that they can. If it's an inventory glut, they bought a lot of that inventory, a lot of those goods, and they're not able to sell it, or at least not as fast as they anticipated. So logistics companies, this is the study or the process of delivering goods. Often we hear about just in time. So just in time logistics, the theory, the practice of delivering goods or parts just in time, just when they were needed. And of course, with the pandemic and lockdowns and shipping disruptions, a lot of companies are maybe getting away from that just in time logistics model. But I think a lot of companies are still relying on it. So it'll be interesting to see over the next decade how does that shape up. But these logistic companies, shipping companies and the like, are paring back their expectations. Paring back, they're cutting them back. We think of a paring knife as a knife that you use to cut a fruit or vegetable with. You're paring away the skin of an apple, that sort of thing. So they're cutting back their expectations or lowering their expectations. For a demand surge, a surge is when something suddenly increases. We can think of a power surge. Maybe there's an electrical storm and there's a power surge. All of your outlets get a sudden boost of electricity, which would be very bad for your computers and other things that are plugged in. You don't want a surge. You might have a surge protector preventing that surge from harming whatever's plugged in. Sometimes we use surge as like a storm surge when there's a hurricane in the ocean, that sort of thing. All of a sudden the waves, the tide is much stronger than it would be normally. There's a storm surge, an increase in the water level. Retailers, these are the stores. So the stores that sell the goods to consumers, the end user, we call those retailers. The opposite of that might be wholesalers or distributors. If a company buys goods, let's say from the manufacturer, and then they turn around and sell it to the retailers, that would be the middleman or wholesaler or distributor. Let's scroll a little bit further into the article now. Here we have a photo of 3 ships at the Port of Oakland, and the caption, "Container ships on March 8 at the Port of Oakland, one of several U.S. ports to report double-digit declines in imports to start 2023." So a container ship is a freighter that ships these containers. You can see the containers on the ships, and then you have the huge cranes that go out over the ship and will lift up those containers and bring them onto the port, onto the docks, where they'll be stored until they put on a tractor trailer and driven away, or maybe added, or maybe loaded onto a train and then by rail shipped away. So double digit, this would mean 2 digits, so more than 10. If it's double digit declines, so it's more than 10% decline, so far in the start of 2023. So double digits, that's getting serious. It's not necessarily just a blip. It could be something much worse. Let's continue down. This article is by Liz Young and Paul Berger. So freight companies are dialing back expectations that demand will recover strongly in the second half of the year amid growing economic uncertainty and signs retailers are growing more guarded about placing big orders in 2023. So again, a lot of good vocabulary so far. So freight companies, we've talked about freight already, dialing back expectations. You can think about it like a mechanical dial that you might use on an old radio or something like that, but they're dialing back expectations. Their expectations were up here, but they've dialed them back. They've lowered them, in other words. That demand will recover. So demand, consumers or retailers, are they demanding more products, more inventory? Is there demand? Demand is, in economics, the opposite of supply. Did they supply? Did they build the goods? Demand, do people want to purchase the goods? So demand will recover. Demand was up here, it went down, but now it's going to recover. It goes back up again, it recovers. So economic uncertainty. So a lot of times this can cause an economic downturn, right? If people are uncertain what the future brings, we don't know what's going to happen next year, next quarter, or even next month, then maybe we don't want to purchase something today. We have the cash, but I'm not sure what's going to happen in the near future, so I'm just going to hold on to the cash. Maybe I'll buy that thing next week, next month, next year, but I'm not going to buy it now. I'm going to kind of delay that demand. I'm going to delay that purchase now because of that economic uncertainty. And continuing, quote, "There was more optimism a few months ago than there is now," close quote, said Paul Svindlin, chief executive of Bensonville, Illinois-based logistics provider STG Logistics, Inc. So optimism, the opposite of pessimism, right? Optimism is you're bright on the future. You think everything is going to go well. Pessimism, you think things are negative. It's not going to go well. Continuing, logistics executives say the volumes of goods moving through supply chains have tailed off more than anticipated to start the year, while broader indicators, such as retail sales figures, are raising concerns about the direction of the economy. So the volumes of goods, so how many goods are going through the supply chain, that is being manufactured, being built, then shipped, and then moved to the warehouses, moved to the stores. All of that is part of the supply chain. So the volume of that has gone down, has tailed off, has gotten smaller, more than anticipated. So in business, they're always anticipating, they're always predicting, what's the next month, the next quarter, the next year going to be. And for a lot of companies, if the growth wasn't as good as anticipated, then that's a very negative thing. When they report their revenue, if it wasn't as high as anticipated, that can cause a drop in the stock price. If reality doesn't match what was anticipated, that can cause problems in the business world. Let's continue. Quote, as we've progressed through the quarter, I'm slightly less optimistic than our customers, close quote. Shelley Simpson, president of U.S. Freight Bellwether J.P. Hunt Transport Services, Inc., told a March 14 investor meeting. So especially these public companies, they want to be very upfront with their investors, with their shareholders, and also financial advisors, financial experts that will rate them, that sort of thing. If everybody expects a lot from them and then the quarter results come in and they're not as good as anticipated, that's going to show very negatively in their stock price and other things. So they normally want to have realistic expectations. So, if they're not as optimistic as maybe other people are, they want to spread that so that people aren't surprised when the results come in. And we can see here some of those containers. You can see, it looks like this is on a rail, and they've been stacked 2 containers on top of each other on the rail car. So often they're shipped that way. Freight demand started slowing midway through 2022 as consumer spending pivoted from goods to services, and big retailers found themselves overstuffed with inventories following a pandemic-driven rush to fill store shelves. Transport companies from truckers to container shipping lines have pointed to anticipated rebound in the second half of this year, saying they expected companies to return to more typical pre-pandemic ordering patterns after working through excess inventories. So remember, consumer is the end user. The consumer, maybe you or I, we go to a store, we buy a TV, we buy a chair, we buy a shirt. We are the consumer. We use that product. And so consumer spending pivoted, its shift. It was on goods, but now it pivoted to services. And so the big retailers, the big stores, found themselves with excess inventory. What does excess mean? Too much. A glut. They have too much inventory, or more than was expected. Let's skip ahead a little bit. Nike Inc. said on Tuesday it would continue its reduced purchasing from suppliers after the sports apparel maker reported that it had cut inventory growth to 16% in its most recent quarter from 40% in each of the previous 2 quarters. The company slashed its merchandise inventory level by about $400 million from the previous fiscal quarter. Nike Chief Financial Officer Matthew Friend said on an earnings conference call that strategically managing excess inventory was a top priority this year. Now, why might a company need to strategically manage their excess inventory? For a few reasons. One, Nike has already paid for it. So whether it's shoes, it's shirts, it's sweatpants, whatever it is, but they paid for it. And so that's money. If they can't turn around and sell those products, they've spent that money, and they're not going to recoup that money for a while, until they can get rid of that inventory. So again, most of the companies have been kind of using this just-in-time logistics. So they don't want to have a lot of extra inventory. And of course, they have to pay to store that inventory. That means they have to have warehouses and store it. It's got to be safe. It's got to be out of the rain. If it's in severe climates, maybe it's got to be climate controlled. They don't want it too hot, too cold, too humid, that sort of thing. Otherwise, the inventory may be worthless. So they have to take good care of the inventory. Otherwise, no one's going to want to buy it. Tastes change. So if it's something that, it's very popular in 2023, but they can't sell it enough of it, are people going to want to buy it in 2024, 2025, or 2030? Now, for some things, it doesn't matter. It's a nice sweatshirt. Who cares the year? But maybe it's based on the championship from 2022. People might buy that in 2022, 2023, less so. In 2030, who wants to buy a shirt from 8 years ago? So depending on what the product is, its value may go down over time. Just the style may not be as fashionable. Skip ahead a little bit here. Quote, it's better to understand what the customer wants and go after it than to buy it all up front and hope it sells, close quote. Thomas Kingsbury, chief executive of Kohl's Corp., said on a March 1st earnings call. Kohl's said it is planning to hold less merchandise this year after the retailer's inventories went up 48% in the second quarter of 2022, year over year. And Kingsbury is kind of explaining what we just talked about, right? They don't want to buy this inventory and then hope it sells. Oh yeah, we think we'll be able to sell this. So if the retailer, Kohl's is a chain of stores, its inventory went up 48% in the second quarter, so that's a huge increase. Now, we don't know how much they bought or how much they sold, but the inventory that they were holding on to went up 48%. So chances are they didn't sell as much as they wanted to, or maybe they bought more than they should have. Looking back at it, they realized, gee, we bought too much. So what are they going to do? They're probably going to order less in the next quarter, because they have this excess inventory anyway. They want to lower that inventory. In second quarter of 2022, year over year. So a lot of times companies will look at this because each quarter may be a little bit different. For instance, in the United States, a lot of companies will sell in December. That may be a bigger month than the rest of the year combined. So that quarter is not a typical quarter. So when you're comparing a quarter with another quarter, often companies like to do that. Often you'd want to do that with the same quarter last year, not necessarily the last quarter, but 1 year ago. So you're comparing the same time of the year to the same time of year. Let's continue. So we can see in this chart, annual change in container imports into the top 10 U.S. ports. So you can see in 2020 to 2021, it went up drastically, and then 2021 to 22, it went down drastically. And then it looks like in 2023, it's going down even further, below the 2019 levels. And a lot of this has to do with the lockdowns and pandemic things. There was a disruption in the supply chain. So once things opened up, there was a huge demand, both from consumers, but also from companies. Like, hey, we weren't able to get our normal inventory, our normal supply, so we want to make sure we get that. But all of a sudden, consumer demand goes down, so now they have this excess inventory, this excess supply. Ministry of Supply went from selling about 2,500 to 3,000 pairs of the comfortable pants during the pandemic to about 250 a month now, even as sales jumped for a zippered version of the pants more appropriate for the office, said Aman Advani, the company's co-founder and chief executive. So it's kind of funny when you think about it that, during the pandemic, they were selling a heck of a lot more sweatpants than they were now that the pandemic, the lockdowns are over. Now it's just 10% of what the lockdown demand was. So it's kind of funny when you think about it that way. Quote, what was 3 months of demand is now 30 months of demand, close quote, Mr. Advani said. Shipping figures are showing signs of weakening demand as companies hold back new orders and global trade volumes falter. Their inventory is increasing, so maybe they make a normal order every month, but maybe they're going to hold off this month. You know what? We don't need to order anything this month, or we order half of what we usually order. So we're going to hold off those new orders because of this excess inventory. We're not getting rid of it as fast as we anticipated. There's not as much consumer demand, so we don't need to order as much as we anticipated earlier. Let's continue. Container imports at the ports of Los Angeles and Long Beach, the nation's busiest port complex, plummeted 38% year over year in February. U.S. freight rail volumes were down 5.2% in the first 11 weeks of 2023 compared with last year, according to the Association of American Railroads. The intermodal truck rail business that includes a large share of retail traffic was off 9.6% in that time, including a 15.2% year-over-year slide in the week ending March 18. So a slide meaning it went down. Let's skip ahead a little bit. Jack Atkins, a transportation analyst with investment bank Stephens Inc., in a March 17 note compared the environment to the period after the 2007 to 2009 financial crisis. Whatever your macro outlook was a week ago, it's lower today, he said, adding the prospect for a recovery in the second half of the year is looking increasingly less likely. So he's what we'd call pessimistic, right? Or he's bearish. He's not looking with optimism on this market. Whatever your view was a week ago, it's going to be lower now, and it's not looking likely we're going to have a recovery in this year, in 2023. Darren Hawkins, chief executive of Yellow Corp, one of the largest U.S. operators in the less-than-truckload market, in which truckers combine shipments from several customers in a single trailer, said its customers project that orders will climb in the second half of the year, although they're still taking a cautious approach. Mr. Svinland of STG Logistics said that he expects freight volumes to rebound from today's low levels later this year, although not as strongly as some of the company customers are predicting. Quote, "I'm not convinced there's any data or merit to support that outside of hope," quote, close quote, he said. So he's basically saying his customers are more optimistic than he is. And he's saying there's really no data to support their optimism, other than hope. They're hopeful, which is nice, but he's saying the data doesn't support that hope. So he is pessimistic. Or when we talk about businesses, and especially the stock market, we might say bearish. He thinks the market's getting worse. So he's bearish or a bear. All right, hopefully this was interesting for you. Remember, conquer that like button and make it ours. And watch this next video. Work hard today and enjoy tomorrow.